Hey everyone, and welcome back to the channel. If you're watching this, chances are you're thinking about your future, specifically, your retirement, and that's fantastic. But with so many options out there, it can feel a little overwhelming, right? Today, we're tackling a question that's on many minds. Between a Roth IRA and a 401k, which one actually grows faster? And more importantly, how can you make sure your retirement savings are growing as quickly as possible? Stick around, because by the end of this video, you'll have a clear understanding and some actionable tips. And we include a link to a free no-frills retirement calculator tool that is fast, easy to use, and doesn't require you to create an account. First things first, let's quickly define our contenders. The 401k. This is typically an employer-sponsored retirement plan. Money goes in before taxes are taken out, which lowers your taxable income today. Your investments grow tax-deferred, meaning you don't pay taxes on those gains until you withdraw the money in retirement. Think of it as pay taxes later. The Roth IRA. This is an individual retirement arrangement. Money goes in after taxes have already been paid. It's post-tax money. Your investments then grow completely tax-free, and when you withdraw them in retirement, those qualified withdrawals are also 100% tax-free. This is your pay taxes now, never again option. So right off the bat, you can see the main difference lies in when you pay your taxes. But how does that impact growth? This is where it gets interesting. When people ask which grows faster, they're often thinking about the raw investment returns. But here's the truth. The account type itself, Roth IRA or 401k, doesn't inherently dictate the speed of growth. Factor number 1, your investment choices. Both Roth IRAs and 401ks are just containers for your investments. Inside, you can typically invest in stocks, bonds, mutual funds, ETFs, and more. The actual growth rate depends on what you invest in and how those investments perform. A 401k invested heavily in aggressive growth stocks might grow faster than a Roth IRA invested solely in low-yield bonds, and vice versa. Factor number 2, your contributions. This is huge. The more money you put in, the more money has the potential to grow. Consistently contributing the maximum amount, or as much as you can afford, will have a much bigger impact on your overall growth than the account type alone. Factor number 3, time and compounding. This is the secret sauce of retirement investing. The longer your money is invested, the more time it has to grow, and for those earnings to earn more earnings. That's the magic of compound interest. Start early, and you give your money the longest runway to soar. So, if the account type doesn't directly make it grow faster, what is the difference in terms of growth? It comes down to net growth after taxes. This is where the Roth IRA truly shines for many people. With a traditional 401k, let's say your account grows to $1 million by retirement. That's fantastic. But when you start taking withdrawals, each dollar is taxed as ordinary income. If you're in a 20% tax bracket, that $1 million is effectively $800,000 after taxes. Now, with a Roth IRA, if your account grows to $1 million by retirement and your withdrawals are qualified, that $1 million is all yours, tax-free. So, while both accounts might achieve the same nominal growth rate from an investment perspective, the Roth IRA can offer superior real growth because you get to keep 100% of your qualified earnings in retirement. This is especially powerful if you expect to be in a higher tax bracket in retirement than you are today. This isn't necessarily an either-or situation. Often, the best strategy involves utilizing both. Consider a 401k if your employer offers a match. This is free money and an immediate 100% return on your investment. Always contribute at least enough to get the full match. You're in a high tax bracket now and want to reduce your taxable income. The upfront tax deduction is very attractive. You expect to be in a lower tax bracket in retirement. Consider a Roth IRA if you're in a lower tax bracket now and expect to be in a higher tax bracket in retirement, which is common as your career, progresses and you accumulate more wealth. You value tax-free income in retirement, which offers incredible flexibility and predictability. You want potential tax-free growth for your heirs. Roth IRAs can be passed down tax-free for a period. Many financial advisors, including us, recommend a diversified tax strategy, meaning contributing to both pre-tax 401k and post-tax Roth IRA accounts. This gives you options in retirement, allowing you to withdraw from whichever account is most tax advantageous at the time. Regardless of which account type you choose, or if you choose both, here are the universal truths for maximizing your retirement growth. Start early. We can't stress this enough. Time is your biggest asset. Contribute consistently and as much as you can. Automate your contributions. Out of sight, out of mind, and your future self will thank you. Take advantage of employer match. If your 401k has a match, contribute at least enough to get it. Invest wisely. Don't just let your money sit in cash. Understand your risk tolerance and invest in a diversified portfolio that aligns with your goals and timeline. Keep fees low. High fees can eat away at your returns over decades. Be mindful of expense ratios on funds. Stay the course. Don't panic during market downturns. History shows that staying invested through the ups and downs typically leads to better long-term results. So, while neither a Roth IRA nor a 401k inherently grows faster in terms of investment returns, the Roth IRA often provides superior after-tax growth because all your qualified withdrawals in retirement are tax-free. The best choice for you depends on your current situation, future tax expectations, and whether your employer offers a match. We hope this breakdown has helped clarify the differences and empowered you to make informed decisions about your retirement savings. If you found this video helpful, please hit that like button, subscribe for more financial insights, and let us know in the comments below. Are you Team Roth, Team 401k, or Team both? And as a special thank you for watching, we've included the link to a free retirement calculator tool to help you project your savings and see the power of compounding for yourself. You can access it using the link in the description box below. Thanks for watching, and we'll see you in the next video.